What's good? What's good? Welcome back to Invest and Trade with Jax. Good morning from Canada. Hope everybody is doing well. We're going to go over our friend MATIC. I'm going to go over a little bit of strategy here with you guys. So we've had a nice little bounce. We're sitting at 197. We're up about 5.4 on the day. We're sitting a market cap of 13.78 billion. 24-hour volume 2.44 billion. Let's get straight into it, guys. So we're here with MATIC. This is not the chart that I want. Okay, so we're here with MATIC on the 4-hour time frame. So we had our first buy zone 214, 192, 175. We hit all three, bringing our average price down to about 192, 193. And you can see we had a nice little push pretty much up to the 0.786. There was some resistance here. So what I've done is I've closed 35% of my trade. Now, the reason that I did this is we've had 3 entries, right? So let's say you entered with 200, 200, 200 as a spot trader, use equal amounts. So you have $600 in your trade. 35% of that is $210. So the reason I closed 35% is I put an entry once again at 175. Hopefully I can get this video out pretty quick. Just if you guys want to use that strategy as well. Not financial advice. Use your own discretion, of course. So what I've done is I've freed up one of my buy zones. Yes, I have less money in my trade. Instead of having 600, I now have 390. My math skills are questionable. But what I've done is I've given myself another buy zone. So if we come back down to 175 again, then I can re-enter and bring down my average price. Now, of course, you don't have to do that. You could leave the money in your trade and you could enter once again at 175. You could just add another buy zone. But I already have like 6 or 7 buy zones set up for MATIC. So for me, I'm totally fine with closing 35% for a small profit and then using that buy-in that $200 is our example here and entering it once again at 175. So if price comes down, then my average price comes down once again. We create a double bottom, which is a possibility. But we have had the bullish cross, guys. There are some bullish signals here. Look at the MACD on the 4-hour. Look at the last time we were this in the floor right here. Look at this, guys. This was the last time we were in that floor like that on the MACD. Huge breakout to the upside right here as well. We wicked down. We had a beautiful bounce back to the upside. So we're all the way down to that level once again on the MACD. Now, of course, we could create that double bottom, a possibility here, guys, but we have broken out of this falling wedge pattern and we're back testing it as support. And usually that gives you confirmation you're going to see your breakout and your target is all the way up at the top of the falling wedge, which is here at 253. For me as a trader, I always prefer to play it safe. So that's why I close 35% because I know I can get a lower average price if it comes down to 175. Once again, you would use the same amount. If you entered 200 and you close 35%, well, you would just enter with 200 once again and bring that average price down for MATIC. So let's pop over to the daily time frame. So we can see here on the daily, we've had this upward channel. Now I was talking about the TA that was posted in the Discord where he was showing 5 waves within this channel, 1, 2, 3, 4, 5. And sometimes that can be followed by an A, B, C correction. So we've come down, we created A, we come up, we create B, and B could be here, to be honest, as well, where we've come up and hit resistance. And then you come down and you create your lower C wave, bringing you back down to the golden ratio, which is coming in at about $1.54. It doesn't mean that's what has to happen. You can push right back up to the top of this channel. It's just one of the possibilities here for MATIC. I'm just going to quickly remove this. You can see we've come back down to this level of support and we've seen a nice little bounce. But right now the market is really quiet, has been over the last few days. I think most retail investors are waiting for the Fed news to come out today. There's so many channels saying December 13th, 14th, 15th, Bitcoin's going to 10K, 15K, major crash coming. Well, December 13th and 14th have passed, and now we're here on the 15th. So the Fed news is coming out today. It's big news for the stock market. And many people believe this is a very decisive time for the stock market, whether it's going to go through a major pullback or it's going to see continuation. So people are wondering how that's going to affect crypto as well. And as you can see, the market has just been extremely quiet. So let's look at Ethereum, guys. So here's Ethereum on the 4-hour. So I talked about it's trickling, bleeding back down to 3580. We have a little bit of a bear flag. We're underneath the EMAs here on the 4-hour. So what I'm going to do is just measure out our little flagpole and see where it brings us from our breakout. So it brings us just below 3580 down to about 3501, which lines up with the bottom of our wick. I talked about that scenario of us wicking down, having a nice bounce and bleeding all the way back down, going through that ABC correction and coming back down to 3580. And as of right now, that is playing out, guys. So that's another reason why I took 35% of my trade off for MATIC, just in case we don't bounce back up to resistance here and we have a little bit of a slow bleed down to 3580. That's when you'll see MATIC start to come back down to this buy zone 175. So I can enter once again. Who knows? It might come down to 152 as well. We are still seeing the increase in longs, guys, for Bitcoin. Come over to the Bitcoin long positions. You can see steadily increasing once again. Well, Bitcoin is simply consolidating, trading sideways, which is a strong signal that we're going to see a pump very soon, in my opinion. Doesn't mean we can't sell off a little bit more. Of course, we can do a little something like this where we come down, we test this level of support, and then we start to make our way back up and break out of this falling wedge pattern, which is a bullish reversal pattern, guys. Or we have this very strong level of support for 43.4K. And I do think that gives us a beautiful opportunity to bounce as well. So a bit of a standstill in the market, a little bit hard to predict what's going to go on right now. And if you're leverage trading with our strategy, your average price was sitting about 187, 188. So you had a nice little profit there of about 7%. I did take some profits and I set my stop loss at my entry just in case we roll over here. I'll try to get back in at 175. Now what can happen is we wick down, you hit your stop loss and then you see continuation. Sometimes that happens as well. So it's just something to keep a close eye on. So we'll see what happens here. We did have a nice little increase in volume. You can see we had a nice little pump up in volume. So we'll see if we hold 192 as support and we see continuation just as we did here, guys. See how we came down? We had a nice little bounce and then we rolled back to the level of support and we broke up to the next take profit zone before seeing a correction back down to this level of support. So in many cases, that's what you'll see happen. You'll break out of a pattern. You'll break a level of resistance. You'll backtest it as support before seeing continuation. Or you have a little bit of fake out. You roll over and we look for that double bottom and our next breakout. Another thing you can do is just stay in the trade, and then if we come back down to all the way down to 152, you enter once again and your average price will come down once again, probably to about $1.80, and you get ready to ride the slingshot back up. Because as I always like to say, it works in wave form. So you come down, you see a nice pump back up. You come down, a little bit of consolidation here, and then you see a nice pump back up. So what we're doing is we're targeting oversold areas. So you can see right here on the 4-hour RSI, we're oversold. So you have buy zone, buy zone, buy zone. Your average price comes down and you ride the wave back up, because these waves aren't small, guys. If we measure this wave back up, that was a 40% pump back to the upside. So always target oversold areas. We were a bit high, to be honest. I'm probably going to start placing my buy limits lower, my buy zones here. Because we were a bit high on this first entry. We probably could have waited to get a little bit lower. So our first entry here was at 214. And if we look at 214 here, 214, we look at the 4-hour RSI, we're about midway. So we probably could have waited a bit lower, 192, 175. Because that was closer to oversold on the RSI. So going forward, I'll definitely start using the 4-hour more often and not so much the 1 hour, because we have a better opportunity to get in lower if we target oversold on the 4-hour chart. That's basically it for this one. Let's give our bull run targets. I always like to do that here for MATIC. So we have the 1.618 at 677, the 2 extension at 1181, and the 2.272 at 1767. The beautiful thing about trading in this strategy is if we were to go into a bear market, we're trading the whole time, right? We're not just waiting for a bull market to start once again, which can take, a year, 2 years. It looks like the cycles are changing, so it might not take as long. So if we started to come down, if we started to roll over and we go into a bear market, what's going to happen is you bounce, right? You come down, you fail to create a higher high, you bounce. That's how it works. You come down in waves. So what we're doing, dollar cost averaging as it's coming down, we sell in profits, starts coming down, we target oversold, we start dollar cost averaging, bounces into profits, we take profits, and you rinse and repeat the cycle. Because some people as investor, I'm an investor too, I have bags that I hold, but the reason that I mostly dollar cost average trade is because of the volatility, is because of the roller coaster, and due to the fact that you can go into a bear market at any time. And as an investor, if you bought here, if you're buying these levels right here, or you bought way up here, the previous all-time high, and we go into a bear market, well, how long are you going to wait to come back up to your buy-in? I know lots of people that bought MATIC up in these levels and they're still waiting just to break even. And that's been months. I mean, those levels were all the way back in May and we're in December. So you can see why dollar cost averaging trading is so effective. Sometimes you only hit your first buy zone. So instead of getting, $1,000 into your trade, you only got 200. But it's honestly better in my opinion because you go through corrections, you hit more of your buy zones, and you're taking profits, you're making money all the time. Instead of just holding, where if you bought in here, you've been holding MATIC for the last, 6 months. Of course, if you're a smart investor, you know not to buy up in those ranges, you know to wait for the pullback, to wait for the correction. However, for a lot of new people into the market or people who FOMO'd in at these levels, you've been waiting since May just to break even. So not financial advice, of course. I just want to show you guys different options, different ways to play the crypto game. We still have our bearish divergence on the daily. We created a higher high, created a lower high on the RSI. So we have to keep an eye on that as well. That's it for this one, guys. If you want access to these charts, they are posted here in the Discord, so you can reference them at all times. And we have over 1,000 members talking all things crypto, posting chart patterns. It's the price of a coffee, and you can sign up through the Patreon. All right, much love. Take care.